Question number 12 is written, after receiving her bank statement, Lynn updated her cash book. Then it is written, which items would reduce the overdrawn balance in the cash book. You must remember that an overdrawn balance in the cash book means the credit side of the cash book is larger. Therefore, whenever we make an entry on the debit side of the cash book, the credit side, I mean the overdrawn balance, will keep decreasing. Okay. In number 1, it is written bank interest received. Bank interest is income for the business, meaning the bank account will increase. You know that receipts and incomes are recorded on the debit side of the cash book. Therefore, we will enter this on the debit side of the cash book, which will reduce the overdrawn balance. Okay. Then in number 2, it is written credit transfer received. This means a receipt directly into the bank from a customer or from a third party, and because of this, the bank account will increase. Therefore, we will enter this on the debit side of the cash book, which will reduce the overdrawn balance. Okay. Then in number 3, it is written direct debit payment. This means the bank has made a payment on our behalf as per standing order. Perhaps he has paid utility bill. This means the bank account will decrease, and as a result, it will increase the overdrawn amount. So we have found that due to number 1 and number 3, the bank account will increase, and as a result, the overdraft will decrease. And option A supports our analysis. Therefore, the correct option is option A. Hopefully, that's clear.